minutes, but so excited that you all made it to day number 5. And if we go look back, I'm really happy because day 5, making it for VIP, you had a kickoff call plus 5 sessions. You should be proud of yourself because most people don't even make it past day 1 or day 2. So you all made it to the very end. We want to say thank you for believing in us, trusting in us to bring you this education this week. We hope you have found it valuable. But I want to give a shout out to Bob. Hey Bob, good to see you again, brother. It's always good to see you front and center with your camera on. I love seeing that. Let's see who else is in the room with us. Tom, welcome back. Carl. Hey, Miss Marilyn, how are you? Good to see. She always has a background too. I just love seeing Miss Marilyn tapped in, ready to go. Cliff and Alan is here. And let us know in the Facebook world or in YouTube if you can hear us and you can see us. We're getting started in just a second. But listen, before we get going today, I first want to give a shout out. I'm going to give a shout out to everybody here that has not just sat and learned, but have taken action. I want to know in the chat, just put me in the chat if you actually did something this week with information. You may have opened a paper trading account. You may have just started charting some stuff, during the market being open. Just put me in the chat if you have taken action on something. Lynn over in Facebook, welcome in. I got to know, have you been taking action? Marilyn has. We know Marilyn has. Who else over in Facebook world has been taking action on this information? Bob says me. Bob says me. All right. We know Marilyn has. Who else over in Facebook world? Sorry, y'all. I was over on Facebook shouting people out and actually click the audio. All right. Cool. Well, listen, I do also want to give a shout out to everybody who took advantage to join the coaching with Dave and Doc that's like 50% off. Kudos to you guys. I want to just say it's been really neat to see you all come through. We had the bonus yesterday where you could jump in and the first 5 people got access to a one-on-one with Dave. And I'm proud to say and happy to say that you all moved fast and all those spots have been taken. But the good news is the opportunity to join Dave and Doc just before we get into all the education tonight, because we still have one final amazing lesson that Doc's going to lead us in. I do want to congratulate Robert. I want to give a shout out to Carl, I believe got in. I think Lonnie got into the coaching. Who else got into the coaching? Let me give a shout out to Gabriel Harris got into the coaching. Oh, let's see who else got in. Charles got in. Tom got in. So kudos to you all for getting into the coaching, because that's like the next step. You could take this information, you can run with it, you try doing it yourself, but having a mentor will speed up the progress and the process. And so we just want to give it a shout out. So there's still time. We're not going to be talking about that forever here at the beginning because we have amazing content today. But Dave, real quick, brother, I want you to come in and just give a shout out to a few people who, got in, but then also, just talk about the power of this mentorship real quick before we go into the education side of things today.
Guys, it's day 5. We're very excited for everything we have today. Doc's going to show you multiple strategies for zero DTE and our campaign cash flow trade, which is one of our favorites. I'm going to go through probably my second favorite, or pretty close to the double-double, my 50-50 trade that I do today for daily income. So, we're excited to get into this stuff. But I'll tell you, I was amazed how fast those 5 slots filled up. So I can't wait to meet with all of you guys. And it's interesting. I had a meeting today with a mentor that I've known for a long time. This was a CEO of several billion-dollar companies, and we're just chatting and stuff. And they know me. They know kind of where I'm at in life and stuff. And I was talking about how excited I was for this challenge tonight and to do this. And he asked me about what we're doing, and I'll pull up on the screen just so you guys can see what we're doing for the 6-month intensive. And I was telling him, about how we put all this together, like 6 months of mine and Doc services, the different proprietary trading tools that we use, that we give them, 3 months of the live coaching, and on and on, right? The weekly trade alerts, the live room with Doc every single day, every trade we do is alerted, all that stuff. And he's like, wow, what are you charging for that? Like $5,000 or something? I said, no, we're just charging $9.95. And he's like, why do you even do this? And I had to stop for a minute and I said, it's a passion of mine. And yeah, I don't have to do it, but what I love about it is I get to help people. And like there was a time where I lived in my car about for almost a month. And then I graduated to sleeping on a mattress on a floor of some guy I met at the gym's apartment because he needed an extra $100 a month and I could afford that, right? And then I fast forward, I remember the first time I made 100 grand in a year trading, and what that did, and like for me, and skyrocketed, my next investments and everything else, and it just went from there. And then businesses and all the stuff that happened, right, over 25 years or so of doing this. And I just remember what that was like. I remember what that feeling was like. I remember how it changed my whole trajectory in life. And and if I can help somebody else have their own breakthrough, whatever that is for them, to do that, that excites me. I enjoy that still. And it's a passion. So that's why I do it. And I explained it to him. He's like, hearing you speak about it like that, I can totally understand it. And so that's I mean that's why I do it. That's why I want to do it with you guys, and pretty excited for it. You can see some of that stuff you get on the screen, and just for those that still want to look at it, you can go to the link replaceyourincomeChallenge.com/join. Check it out. Love to have you in there if it's a good fit for you. I'd love to be able to work with you and hopefully help you have your breakthrough over the next 6 months and really send you on a different trajectory in your life towards your financial freedom or your goals and that sort of thing. So that's what it's all about for me. Doc, I mean, you've got, some great reasons probably along those lines and stuff for you of why you do. I mean, you're $1 million trader. I mean, why do you do it still?
It's funny you mentioned that because when I first was learning about options, it was my dream to be able to work from home. We're talking 20 years ago before COVID, right? So that was my dream, to work from home. I mean, we were still wearing ties to the office. We were still fighting on conference calls all day long. And I'm like, this is miserable. I'm making a pretty good income, but this is just miserable. So there was a combination of inspiration pulling me towards trading and then desperation of getting out of that. And so finally, I burned my bridges. I crossed the bridge. And then what I found was, after a couple of weeks, it was just me and the dog, right? I'd gotten rid of all my social circles, all the dudes that I used to go out to lunch with and everything like that. And I found that trading was actually a very isolating business. And then right around that time, somebody must have been listening, because I got a knock at the door, and it was somebody that I knew that was a fellow trader, and they said, "Hey, I heard that you quit your job and you're trading full time. Could you show me how to do that?" And I'm like, "Yeah." And this is what gets me fired up to this day. Making money is, I know this sounds kind of funny, but making money is actually kind of boring. If you're doing it right, it's boring. But helping people during the day, that's my social circle. That's my way to stay one step ahead of everybody. It keeps me sharp, and I feel like I'm making a difference that's out there. So it's my goal is to be able to take as many people as possible and help them over that bridge as well too, into financial independence.
No, that's awesome. And it's a great segue for you because you're going to kick it off today with some of these top of the pyramid strategies. And then I'll end with going through the 50/50. So why don't you go ahead, take it from there. And again, it's on the screen, guys. ReplaceYourIncomeChallenge.com/join. Check it out. Would love to have you in there and join some of all the others that have taken advantage of it. And we look forward to seeing you guys, obviously, in the months to come on that. So.
Okay, so can you guys see my screen? Do you see my first screen there? Replace your
Yep,
income.
got it.
Okay, great. All right, off we go then. So again, I'm not going to be making any trade recommendations today, although I will show you some of the trades that I made today. So day 5, income strategies. So far, we've covered the first 2 levels of the income pyramid. So we've covered these ones. We've covered these ones that are down here, right? And so what we're going to work on next is this one up at the top of the pyramid. We're going to skip the 3rd level during this challenge about directional swing trades, as it's really not about income. Those are more about aggregation of capital. So the very last level is intraday income strategies. The top level of the income pyramid is where we focus on these intraday strategies. So where most of our trades in the lower levels of the pyramid maybe take a week, a month to profit, these trades will pay today. Now, a lot of people are excited about something like that. There is a cost to that, which I will talk about when we get to the end of this session. The proliferation of these trades is due to the release of zero DTE options over the past couple of years. So they started doing weekly options maybe 20 years ago. That was a big thing instead of the monthlies. So we went to weeklies, and then, I think it was 2 to 3 years ago, they started adding Monday options, and then they added Friday options, and then finally they filled it in with Wednesday, and then finally we got Tuesdays and Thursdays. So they sprinkled them in very slowly, very agonizingly, but eventually we got all 5-day options, and we see these on the SPX, XSP. I'll go through the list in a minute. These options will expire today by the closing bell. So it's almost like if you imagine walking into a room holding an ice cube in your palm, and on the other side of the room is this raging fire. This is supposed to be a fire. It's not a hand or anything like that. So the closer that you get to this fire, the temperature in your hand is proportional to the square of the distance. So that means that the closer you get, the infinitely hotter that the flame gets towards you. And then, so the ice cube does melt in an exponential fashion like this. So we're taking advantage of this type of decay. So these are not the options you want to buy. You want to be selling these options. So we do have these daily options on the S&P 500 through the SPX, XSP, the Spiders, the Russell 2000, the NASDAQ 100, and also futures options, which are through the S&P 500 E-mini contract and the micro E-mini contract as well, the MES. I generally will focus on the SPX and the XSP. So we typically do this in the room. I'll trade SPX. And then if we have something which takes on a little bit more margin, we'll trade XSP, which has got 1/10 of the notional value, so that everybody with small accounts can be able to play along. Most of the strategies are just a variation of what you've already learned in the past 2 days, which is great, right? So you can take the same thing. It's almost like learning one golf swing. You learn one golf swing and you can use it on just about every club, with the exception of the driver and the putter. One swing will do it. So the trade examples that I'm going to show you here netted me an additional 300. So this is a typical day of me trading these strategies. And I made sure to play them all today just to show you. And they an additional $341. So I'm not talking about 15 grand or something ridiculous like that. You got to have a lot of capital to do something like that. But 341, this was a very low stress day. And so you can see that if you do this on a consistent basis, if you're pulling in $300 a day, 300, 300, pretty soon it adds up. And this is where you get those exponential returns. This is where the compounding really kicks in. Okay, the first thing I want to go over to is zero DTE iron condor. So you recall this sort of shape to the trade. The only real difference between these strategies and the ones that we discussed yesterday is time. Decay is, as we mentioned, extremely fast, and your skills have to match that of the trade. When you were learning to hit a baseball once upon a time, now this is probably not that long ago, but there was these, I think they're still around, these parks where you could go stick some quarters into a machine and then they'd pitch some baseballs at you. And so these batting cages, right? So they were automated, and the balls would kind of roll back down, feed into a machine, and you'd pick the speed that you want. There was a 60-mile-an-hour pitch, 70, and an 80. I think that's about as far as we got. So what I don't want you to do is to say, well, okay, I just bought my first baseball bat. Let's go straight into the 80-mile-an-hour batting cage. I want you to work on that 50 or 60-mile-an-hour cage first until you get really good, until you make really good contact with the ball and your swing is grooved. And then you can start to work a little bit faster, a little bit faster. But I would start at the bottom of the pyramid. Again, you need to earn the right to do this. This is why these are active income strategies. They're anything but passive. They are not passive. These are active. You have to be there. You can't put them on and then, go to lunch and take out the garbage and then walk the dog around the block and then check later on. Well, you can. There are certain ones that you can if you want to do something like that. But I would stress that these things do move very quickly. And the opportunity is there to be grabbed, but you have to be decisive. So I use 3 different versions of the iron condor depending on market conditions. Low probability, which is just like what we talked about yesterday. The expected move iron condor, which is maybe not something you've heard of. And then the iron butterfly, which is just a very narrow iron condor. So let's start with the expected move. Now, you may have heard of the expected move before. What this is an expected move is actually one standard deviation in price movement. So from where the current price is right now, what we calculate is one standard deviation in price movement up and down. And the way that that figures out is that there's a 68.2% chance that you're going to win, that the price will finish within this envelope. Okay, so this is the slowest of the 3. This is a little bit different from like the high probability trades that we worked at yesterday, because those are more like this. So they're wider, but they have more risk than this particular trade. So this one's kind of a hybrid, if you will. So it's a one standard deviation for the iron condor. This usually equates to about a 16 to 20 delta. So 16 to 20 delta on the calls, 16 to 20 delta on the puts. It's going to be somewhere around there. So 16 to 20 delta on that. And that's for the short option, the short delta. And so roughly I'm getting about $1.50 credit for a $5 wide spread. So the risk on these trades, if the price just completely runs to the downside or so, is going to be maybe $3.50. So we're looking at $3.50 and $1.50 potential profit. Now, I rarely stay in there for the entire profit. I'm usually just grabbing what I can, trying to get my fair share. Get in, get your fair share, and get out of the trade. So here's the trade. I started it at 9:46 this morning in Thinkorswim. I got $1.55 credit. And then about an hour and a half later at 11:13, my target was hit at $1.05 debit. Now, this is the type of a trade where you don't really necessarily have to be watching every single tick of this. It's not a bad range. The risk is such that if I had to let this thing go, if I had to take an errand, I could probably do that. And I believe that I was eating lunch at the time that this one fired, because I came back downstairs to my office and then boom, it's gone. So you don't have to be hyper vigilant for this one. So it's a nice hybrid trade. It's something that's good for you to get used to doing. Okay, but you'll see $1.55 credit. So for those of you that are paying attention for this spread, what would the risk be on this trade? If I'm getting $1.55 credit and I'm doing $5 wide spreads on the iron condor, what would my maximum risk be if the price just completely dropped to the downside? Or rally to the upside. If I saw a black swan, all of a sudden Jerome Powell comes out and says, we're going to change interest rates to 10%. We're going to get some movement on the market. What would my maximum risk be? So I'll throw that out there. If you're paying attention, you'll know the answer to this. And I may come back to this one in a minute, because I have not seen the correct answer yet. Okay. So next up is the 0 DTE low probability iron condor. This setup should be actually a little bit faster because what we're doing is we're squeezing in the strikes. We're getting a little bit closer than the expected move. We're getting a little bit closer than the expected move. So anytime you get closer, anytime the short strikes get closer to the price, the speed goes up. You get less room to work with, which is bad, but the speed goes up, which is good. So what I do is I try to get a one-to-one risk reward setup. So whatever the risk is down here, I try to set the reward or the credit for this to be the same thing. So 250 and 250. And my example is close, but it wasn't perfect. All right, so typically I'll try for like a 250. This usually equates to about a 30 delta. So it's usually about a 30 delta here, 30 delta here. And that usually brings in about the right amount of credit. Okay, so here was today's trade. I got in for a 240 credit. And as you can see, I'm just looking for a $50 per contract profit. So this fired, I entered this at 9:49 and this fired about an hour and a half later. It should have been faster, but the problem is that if the price does move, it's going to slow it down. So this is about the same amount of time as the expected move, but you get a better return. Now, same question for this one. What was my risk on the trade? If I got in for a 240 credit, and you can see that the spreads here were $5 wide. What was my risk? What was my maximum risk on this trade? Okay, next up, I still have not seen the correct answer on those two, so we're going to go back. We're going to go back on those. That is a correct answer, is Doug. Doug got the correct answer for number 2. Next up is the 0DTE iron butterfly. What we've done is we've jammed together the short strikes. They're at the same strike price. And you may say to yourself, who on earth would do something like that? That's lunacy. Why would you make the iron condor as narrow as possible? Speed, guys. This is an iron condor with short options married at the same strike price. The setup is the fastest setup that I currently pursue. This is active income. You can't go out of the house. You can't party, but you'll see why in a minute. So the expected move was 23.29. So what I do is I set them up at 25 and 25. I want to go just outside of that expected move. So the next $5 increment of strike prices on the SPX is where I go to. The center short strikes are roughly at 50 delta, right at the money when I'm setting up the trade, and the wings are set to be just wider than the remaining expected move for the day. So the expected move may start out the morning at the opening bell at 39 points, but by the time you get around to putting the trade on, it may be 30. So you don't want to be that wide. Okay, so this trade, I entered this trade for a 1430 credit. These are big credits because these are much wider spreads. These are much wider spreads. Okay, so each spread, instead of being 5 points wide, these are 25 points wide. So these are big wide spreads, right? You got to earn your way to these ones. Look at this. This trade only took 15 minutes. I was in at 10:02 a.m. I was out with my target profit set based on a limit order. I was upstairs, I was checking the mail. That's what I was doing. I went and checked the mail, came right back downstairs, the trade's out. Awesome. So in for 1430, out for 1380. Okay. Out for 1380. The risk in this is actually 2,500 minus 1430. So that's how you calculate that. And if you've got a Thinkorswim account, this is where you can find the expected move. Now, they also do this in Tastyworks, but I prefer this number in Thinkorswim. It's slightly different. So this is Thinkorswim through Schwab has got probably the most accurate expected move that's out there. Okay, some overall thoughts on these 0 DTE iron condors. These trades require dedication, training, skill. You got to have chops. You cannot just go in and start slinging contracts around and learn it on the fly. I want you guys to do this on paper first. Earn the right to do it. It's very important to know when to step aside and get out. There are times when I just get out. Like, I don't like this. I set up stops ahead of time. If the price goes beyond a certain level, I shut down the trade. For reference, as I write this, I was writing this at 3 p.m. Eastern time. All three examples of these iron condors will be well underwater right now. We had a move to the downside today. With 1 hour left in today's session, all three of those examples would be well underwater. So I don't just leave them for max profit, because that also leaves me open to max loss, which is not good. I truly believe you need to master the slower income pyramid trades first before you tangle with these. You must earn the right to ascend the pyramid. Okay, now we're going to get into the campaign diagonal, what we also call the cash flow diagonal, the campaign cash flow. Now, if you haven't traded time spreads before, they will make you better at what you do. They will make you better at what you do. I've certainly noticed that myself. Think about this. You've got two options. A time spread is where you have two options. One is a short-term option, which in our case is expiring tomorrow, not Saturday, but Monday in this case. And then one is about maybe 40 days away. So what you're going to have is that short-term option is going to expire first. The longer-term option will have some decay during this time period. So this is our hold time of the trade. That's our hold time, or less. So this long option will have some decay to it, but not nearly as much as the short option. So it's the differential between the two is where we make our money. It's a genius concept because this is an edge will occur no matter what. It's like the sun coming up tomorrow morning. It's going to be there. This edge will always be there. When the market is in a quiet and trending character, I usually pursue these trades every day. I do not want to trade this strategy if it's doing this kind of stuff. That's when Dave's target 100s and some of his double doubles and 50-50s are lighting it up and making jack. But when the market's doing this, which it's doing 80% of the time, I'm using my cash flow campaign. So here was this morning's trade. I sold one DTE put option, and one DTE is actually, in this case, it's Monday. So I'm selling Monday's option, and I'm simultaneously buying a 40 DTE put option. The overall trade is a debit spread. So in this case, I'm actually spending money, or money comes out of my account to set up the trade, just like you're buying stock or buying a long option. During stable markets, I'll hold these overnight and roll the short option to the next one. I'll show you an example of this. This is why we call this a campaign. During less stable markets, of which we're in right now, it's a little bit less stable because we're seeing all this big volatility. I'll close them the same day, and I'll shoot for a 2 to 3% return. The long anchor put option acts as a downside hedge. Can you imagine that? Where you're not worried about a black swan to the downside. So if you're holding something overnight and all of a sudden something horrible happens, which has been known to happen over time, then you're automatically hedged on this trade. So here was today's. I entered this at 10:06 And this is actually one single trade. It's just that sometimes two contracts gets filled independently. But we entered that for a 6405 debit. So this is this is a big boy trade. There's a fair amount of capital involved there. But I didn't need to use two contracts. I could have used one, or I could have used the XSP. Don't have to use the SPX. It's great if you can use it though. And then 1243, which is about, what is that? 2.5 hours later, we were done with this one. Okay. And it's not as fast as some of the 0 DTEs because I'm selling 1 DTE. So it's a bit more controlled. I've got a bit more room to work with. And it gives me the option to be able to take that overnight. So today's trade produced profits of about $90 a contract, or 1.4% in about 2.5 hours. Not bad. And very little drama with this type of trade. So I went out and did some photocopies. I went out and washed my truck, came back, and this trade was ready to be closed. Trade was closed early due to losing price support. So this is how we do as a cash flow campaign. I'll start off, like in this case on 10-7, I set up the long option. That's in the shaded is the long option. And I kept this long option through the entire trade. The 1, 2, 3 options down here, these were the short options. So each day I just rolled it out. We made a nice profit on this one, roll it to this one, made a nice profit there, made a nice profit there. Okay, so the naysayers among you may look at this and go, look how much money you lost on the long option. That's my hedge. I don't care what happens to my long option. That can go to 0 for all I care. All I care about is the bottom line here. So for really 3 days making this kind of money, doing it over and over again is pretty nice. This is a really, really nice trade. These are incredibly efficient. This is what I call a campaign. So the campaign diagonal is one of our best performing strategies since October 2023, when the market started turning up again. And I'm looking forward to employing it. I'm just getting my toes back in the water after December's correction. We sit out corrections on this strategy. They don't perform well during corrective markets, so I'm overly cautious to avoid them. Most gaps to the downside occur overnight, so if the market appears unstable, I will work the trade during the day and go to cash by the bell. Not all brokers allow this strategy. Schwab, in particular, does not understand it. They don't get it. I would suggest using tastytrade or E-Trade for this if you can. They may have changed. I don't know. 6 months ago, they weren't allowing it. So that is the top of the pyramid, at least from what I do. And what I'm going to do is I'm going to flip it back over to Dave. And he's got some different variations of his iron condor, which are much more shorter term and live at the top end of the pyramid. So Dave, back to you, man.
Excellent. I am going to pull this up. Let's see here. Hey, what are you guys' thoughts on that? Man, I love that campaign. When that thing is rocking, you're making 200, 300, $400 every single day. You run it for 3 or 4 days out, run it for 3 or 4 days out and reset it and just keep doing it. I remember, there was a stretch where it was like, gosh, it was like $10,000 off of one campaign that went, off one anchor put that, we did. It was pretty awesome. So that, and it's really easy. It takes like 2 seconds every day. You just literally go and roll to the next day, roll to the next day, until you're ready to shut it down. So Doc's right. When you've got that trending market like that, it is just such a simple, easy trade to do day in and day out, with very little worry because you've got your downside hedge, right? So, I want to talk. So let me pull this. Everybody see my screen okay? Just type yes in the chat here in Zoom.
Looks good here.
Excellent. Awesome. All right, guys. So the 50-50 strategy. As I talked about yesterday, uh, there's about 5 different strategies I employ in my weekly service and newsletter that I do. And they cover everything from kind of that weekly cash flow to 6 to 8 months, right? That hands-off income. So yesterday, if you remember, I covered the double-double strategy that I use for weekly income. I do it every single week. In fact, some of you that took advantage of the 6 month intensive should have gotten my alert today that I put out with some of those new trades. And now I want to talk to you about my 50/50 strategy, which is kind of just like Doc said, it's kind of a play on the double double, but I use it for daily income. And so the trade is an iron condor, right? Or a vertical spread strategy to maximize cash flow. It's designed to stack the odds in your favor for income over a 1 week or less period. Target of a 2% return on risk. Um, which is typically $5 to $10 per contract because I do 2 wide spreads. I'll show you that here in a minute. It can be traded every single day if you want to. I currently, in my service, typically trade it 3 days a week unless there's like next week we've got the Fed and stuff. So I'll hold off until after that and then, get right back into it. But trades are set up during the day, 10 to 12 minutes or less, good to cancel. Average actual time of the trade is 6 to 8 days. Sometimes it's less, sometimes it's out in 2 or 3 days, but 6 to 8 is typical. Um, why is it called the 50/50? Well, it's designed to provide a 50% or better return on the trading capital that's allocated to it in the course of a year. And as I said, I trade these 3 days a week. I don't trade them every day. So it would return more if you traded them every day. But simple math, if I'm making 2% minimum return on risk, every 6 to 8 days on doing 3 trades a week, it compounds to a little over 50% return. Again, it's the goal. As mentioned before, 90+% historical win rate on trades means not every trade's going to work out, right? So, maybe it does 40% in a year, that sort of thing. But truth be told, though, a lot of times, as you'll see, like I've averaged about 7% so far this year on these trades. So you actually can make more than 2%. So that's kind of really nice. So that right now is pacing me for 80 to 100% this year on the strategy. So pretty exciting, right? I'm going to show you some of these trades in a few and some setups, but I want to talk about how these trades work. So this is, a chart of GLD, and I set these trades up on the indexes or like commodities index ETFs using again the SPX, the RUT, the NDX, the SPY, IWM, the Qs. DIA, I want to talk about that today. There's an opportunity there that's going to be really interesting. GLD, SLV, once in a while I do them on individual stocks. When I think I have a really good setup for a trend, I'll take the other side of it so it runs away from it, right? These trades are sold just 10 to 15 days out in the cycles. And they do best when you're taking advantage of a trend for the vertical spreads or sideways action for iron condors. They're more of an active trade, and then I trade them more often, and I change the indexes or underlyings. It could be 3 different ones in a week based on which one has the best chance to trend. So I primarily sell $2 wide spreads and iron condors with the strategy. And if you look at the screen, I have a picture from earlier today of the daily chart on the GLD, which is the gold ETF. And at the bottom is the energy line. So can anyone remember from yesterday, if you're looking at that energy line, right? Can anybody remember from yesterday what that means when the energy is at the lower levels like that on the chart? What does that mean? Exhaustion, right? Great, Tom. Marilyn, great job. Yeah, correct. It's exhaustion, right? So I use the energies a lot for these trades to help with identifying the trend, but I also look at the weekly chart as well for its energy. So if you look at this daily chart, most would say it's probably best to just sell a call spread because the energy is exhausted and the index is going to fall back down to charge it back up. But let's look at the weekly chart real quick. So when you look at the weekly chart, what do you see on this one? What do you guys see when you look at the energy on this one? Good energy, right? A lot more charged up. It's a much different scenario, right? We've got a chart that is breaking out and starting to release its energy to the upside. And if you remember, the weekly time frame is bigger than the daily time frame, so that ultimately controls the daily chart. So what are we to make of this, right? Well, I'm selling this trade about 15 days out. So I want to be careful because even though the daily chart's exhausted, it can get charged up in just a few days, walking sideways or maybe pulling back a little bit. And then it'll be off to the races again with this weekly energy that's there, right? So doing just a call spread to get the necessary credit that I require may put me in danger of actually being attacked unless I'm in and out real quick, right? And so rather than take that risk, the better trade in this scenario is to do like an iron condor, biasing it with strikes a little closer on the put side, believe it or not, or just do the put vertical, which is what I did today. The index may fall over a few days or walk sideways, but ultimately it's going to be back in that uptrend really soon after that, right? So traded most of my 50/50s on GLD this week, actually, and I'm playing this trend because I know how it will go from experience. This is an example, like this is what I do for my students in the service and alert them to those trades, right? Find the best chance for success, and of course, for my own benefit in my trading. Some of the trades from this week have already hit their exit targets. The one I did today was selling out to February 7th, and I sold the 249 by 247 put spread for 21 cents. Okay. My risk was $200 per contract. I'm bringing in $21 per contract. So it's a little over 10% return on risk. I typically will exit these trades for 5 to 8 cents. That's how I'm getting, 6, 7% average. But my goal is a minimum of 2%, which is about 5 or 6 cents, right? Or $5 or $6 per contract. If I see things going against me and I've got that, I just get out and I hit that minimum and move on to the next one. So to kind of go through the rules for you, um, per my analysis of the daily and weekly chart energies in the Bollinger Bands, I choose the best index or index ETF to sell the 50/50 on daily. I sell in 10 to 15 day cycle using the weekly and regular monthly option cycles. I use $2 wide contracts. I set up my trades, good to cancel orders during the day, just a couple minutes. I target a 2% return on risk for the trade, but typically sell my positions to give me a little buffer of that credit. So I typically want to get 18 to 25 cents per contract that I do. And then or so 18 to $25, right? I use that buffer to buy back that trade for $5 to $8, usually in about 5 to 7 days. Set these trades up with about a 90% or better chance of success. Once in the trade, there's not much that I need to do, but let time kind of work until I exit. So what are the risks on this thing? Well, like the double double, one of your sides of the condor or your vertical spread could get attacked, causing you to lose on that side of the trade. It's not impossible, but really one of the biggest benefits of the trade is that it moves really fast with the theta decay because it's set up, right? It's starting with a 90% chance, short time frame, right? Pretty far out of the money, right? It's always outside the expected move for the cycle. And so all you need is a few days of time burn, or if it goes in the trend direction and all of a sudden you're out of it. But for this, I use really the 3x static risk model for defense. Once I hit 3x static on either side, which means in the case that I just gave, I got 21 cents. So if one side gets to be 63 cents, I just exit that and then keep on. I make it up over the next two trades and I'm doing them every week, multiple times a week, right? So it takes me about, 2 days to make up for it effectively, right? But so far this year, 100% win rate. Last year was about a 97% win rate overall on these things. So 3x works really nice for them. You just move on to the next one, right? All right. So with that said, let's look at some trade setups. Any questions? Does that make sense? Do you guys follow that okay? Especially you VIPs, if you have any, drop them in the chat. But all right, I'm going to pull this up because I mentioned it earlier and I want to show it. This DIA chart is ridiculous. The energy is so far, I don't even have a reading on it. So the DIA, guys, is the Dow Jones. It's the diamond. So it's the kind of like the SPY to the S&P 500. So this thing right now has just gone so bonkers to the upside. It's got literally no energy left. Okay. So I'm looking at, does this pull back this next week? And you know what? Most of the charts look like this right now on the indexes. The S&P, the NASDAQ, all of them look like this. And a great place for this to pull back to would be right in this breakout zone here. So right around 435, even down to 430 would be a pretty normal, place to come back down to, find support, and then get off to the races again, because like the other charts, this has a lot of energy on the weekly chart. So you can see kind of breaking back out, but you'll notice it hasn't hit all-time highs yet. The S&P's hit all-time highs. The NASDAQ hasn't either, but this hasn't come close to all-time highs yet. So this is probably a scenario like I'm going to be watching this next week. I may sell the call spread on it literally and just go 5 days out and just, see if I can get in quick and get out. But if I was going to go 10 to 15 days, I want to see this thing fall down to here and then sell down below here, which I'd be able to do on this and take advantage of that, right? So that's something to watch. If you're just trying to do this on your own, like this is a setup to watch over the next week, you may get that opportunity, right? So I'll leave that there for now. But let's look at GLD since I've been trading it. So GLD has been on a tear. I started back here with it, right, when it started to break out, and I sold exclusively put side and it ran away from it. And so very quickly on those trades, I was out. I've got a couple condors. I'm way up above the all-time high. I'm like mid 260s on those. And then I'm down here about this moving average. This is getting to exhaustion. It should be walking sideways to pulling back some, probably stay above 250 over the next probably 4 or 5 trading sessions. The weekly chart, though, is like I showed you on the thing, is just ripping, and it's starting to really break out of kind of this squeeze that's happening on the Bollinger Bands. And when you see a squeeze on the Bollinger Bands, here's one here, here's one here. Think of it like if you put water in your hands and you go like this really fast, water comes shooting out of your hands. The same thing happens when you see a squeeze on the Bollinger Bands. So it's best to when you see that, it means a pretty good move is coming. So it's best to just let it start to unfold and take advantage. And so seeing this start to squeeze out of here, that's why I sold the put spread in today's alert. Because I know that, yeah, on the daily chart, we might be a little tired, but the weekly's in control. So maybe we waffle around in here for a little bit, but ultimately this thing is heading higher. So the beautiful thing is waffling around for the next couple of days for the iron condors I have on, I'm within a few pennies of getting out of those. So it should hit, but that vertical is going to do really well down here, right? So just to go to the options chains on this, just to show you the setup on this. So here's the options chains on GLD. And I went out to February 7th. You can see it right here. And I've got a few trades out there, but what I did today is I sold the 249 vertical by 247. And you can see I've made about a penny on it so far. It's still about 20 cents, which is good. Expected moves about 5.7 from here. So right around 50 would be where it came down to. That's why I placed it outside the expected move. Typically, I do these between about a 10 to 15 delta. That's where I'm doing it. That's kind of the sweet spot for these. And as you can see, I've got the top side, and that's where that top side one's about a 15 delta here, right? So that's it. You put it on, you put it in, and if I do this, just so I can show you, even a small account, I do 10 of these, and there's $200 in credit just about on about $1,800 worth of risk. So, I mean, you're doing the math, right? We $997 for 6 months. Just one of these trades pays for a month of that $997, basically, and do them 3 times a week. So, and obviously you can do 5 contracts, you can do 10 contracts, whatever for your size account. But what's nice is that it doesn't tie up a lot of capital and they move quick. So you're turning it over. So it's like, think about making like $150 a day, $150 a day, just like cranking that wheel on that machine. And that's how these trades work. And that's why I like them in conjunction with like the double doubles and the wheel and then doing the campaign. You add it all together, on a $100,000 account, you're making a good 8 to 10,000 a month or more doing this stuff. Bigger accounts, obviously a lot more. On a $10,000 account, you're making $1,000 a month doing this stuff, right? So there's great opportunities by blending all this together. And that's why we have the pyramid. So that's an example of one. Let's go back to the charts. I'll just show you. The IWM is actually not a bad chart right now. That is the Russell. It's just the SPY to the S&P 500. Again, into exhaustion, right? It's got a weekly chart, though, that's kind of down here, right? So the weekly chart is not as charged up as the others. It's burned out, well, about maybe at least half its energy, maybe a little bit more. You can see this has been kind of the floor lately. So this thing's kind of due to waffle around in here a little bit, right? So what I would expect from the Russell, we saw some of it a little bit today, but pulling back a little bit more, maybe some train tracks in here, but I don't expect this to go flying out of here anytime soon. And those of you that followed my double double today, right? What was it? It was on the IWM, and I'm way out above here, right? And I'm way out down below here, right? On this. And that's what I'm playing. I'm playing this thing kind of just walking sideways for a good 6 to 10 days or so and taking advantage of that time burn. So right now, for a 50-50, you could put it on this index. I do an iron condor on this index, even knowing it can fall down a little bit. I'll show you what the options chains look like and how we can set it up. The nice thing with iron condor is you can sell a little bit further out of the money. If you're doing a vertical and you're trying to make all the money on one side, you got to go a little bit closer to the money, right? So let's go to that IWM just to show. I may do this trade on Monday, depending on how the open is, but we'll go out to February 7th. That's still right on that 15-day mark, right? And I'll come in here, 216. You guys saw 216 was that bottom Bollinger Band, right? So if I do right here, a vertical and I go too wide, you can see I'm getting 16 cents for that. So that's actually paying pretty good, right? I could actually do that alone. But you know what? Knowing that, how about I go a little bit deeper? Maybe I can do a 215 by 213. And there we go. I get about 9 cents, right? So I can do either one, but now let's look at the top side. So at the top side, we'll go in here at about 240. Let's take a look here. 240 by 242. And you can see it's about 13 cents. So I actually can go a little higher if I'm trying to get like 18 cents or so. Go up, we'll go to 242. Let's try that. 242, 244. If I did this with that 216, I'd probably be in pretty good shape. So let's just set that up. Let's do a sell iron condor. We'll make this side 216. I don't mind taking a little bit of extra credit to the downside there. I think that, we're in an uptrend overall. So 216 by 214 by 242 by 244. And you can see right there, I'm in that sweet spot, about 19 bucks, right? Then as soon as I do this, I'd put an order in to buy it back for right around 5 cents or so. And that would ensure that I'm making about 6% or so on the trade. And that would be a pretty good setup. Let's just go back and look at the charts again, just to confirm that we've got some good setup here. So we know that, in fact, the expected move on those chains, 7. The expected move was 7. So we look at the charts here, 7 points from here is 235. 7 points below is 221. So I'm down here at 216. Plenty of room down there, right? And I'm all the way up here at about 242. So not far from the all-time high. So pretty good room there as well, right? So overall, pretty solid trade. Nice iron condor. Throw that on probably within a few days, probably by Thursday. If I did it Monday, Wednesday or Thursday, it would hit that 5%, 5 cent mark and get out of there. So that's effectively the trade. That's how it works. And so what you just need to understand is trending, right? You just got to understand trending. Why do I give myself more room to the downside? Because we get a better chance right now to come back down a little bit more. Pushing higher from here is a lot tougher. So I can be a little bit closer, right? But I'm still a good, 12 points or, well, more, 14 points out on that side. And then another 12 points out on this side. So pretty good overall, right? 2 times the expected move almost. So that's how those trades work. And that's what make them just so prolific. Again, like cranking the wheel, right? Anything else I can show you? Let's see here. On the SPY, same thing applies, guys. I think all these are going to pull back, right? I think the Russell's already kind of in that zone because the weekly is, at that point that it's got some of its charge gone. One thing that's going to, if I see it happen again, this comes down to about 600. See the breakout zone right here where we broke above that last lower high and took it out? I would not be surprised to see the SPY come down about 7 points or so and test this next week. When I see that happen, if it starts to level off there, then and we start to see the energy get charged back up from doing that, I'm going to aggressively sell into that. Okay? Because that means we're going to turn around, we're going to start heading back the other way, and this weekly energy is going to continue on after that. So those are the type of things you literally can make, I could make all my money in 3 or 4 trades a year if I just do this right, from a target standpoint that I want to make. And so there's some just great setups, and my students know it when I put it out because I get really excited and I'm doubling up contract size on these and all that stuff. So that's how these work. So that is the 50/50, and I know we're close to the end of our time. So would I close it before Fed on Wednesday? No, Bob, I wouldn't close it before Fed on Wednesday. Again, I've got to make the decision if I'm going to trade it on Monday or just wait till the Fed, on Wednesday. I may take it and just do a lower amount of contracts with it. I do like the setup. I don't think the rut's going to matter that much. I think the Fed's pretty benign at this point. I think what the Fed's going to do is come out with the same shtick that they've had. They're not going to raise rates. They're not going to lower rates. They're just going to say we're watching the data. And so I don't think this Fed meeting is going to be so much of an impacting one like December was, right? So, all right, so that's that. Let me go back over to here and just back on here, and we can take a little bit of questions from everybody, and then we'll get into the VIP session. So just putting this up for you guys, what's all included for the $997. Again, 150/50 trade a month, literally pays for it. So we're doing 3 a week. So it should be pretty easy to get there pretty fast. Maybe in the first couple weeks, you've got the whole thing paid for, but this is everything that's included in there for you guys. So Mike, do we have any questions from the Facebook group on any of this?
See any at this moment. If you have questions, let us know. We can maybe. Okay, here we go. Never mind. Lisa literally just typed one. Lisa said, "Did he use an iron condor call or a put, in which what determines which one?"
Well, an iron condor is a call and a put, right? So I'll pull up the options chains again and show you how we have this set because I still got it there. So what you're doing is you're selling a call spread, which is selling the near strike 242 by 244. So what I'm doing is on the call side, I'm basically saying, all right, I'm going to sell this strike and I'm going to buy this strike simultaneously. And that's a call spread vertical. The difference between there is the credit that I get. My risk is the $2 width, right? Because it's too wide. On the bottom side, I am selling the 216 right there, 216 by the 214, right? And again, the difference between that is the credit I get. So when I do them both, remember, when you do an iron condor, your risk stays at $200. Even though I've got a 2 wide on both sides, I can't lose on both sides at expiration, right? The only way I lose is if that price is in that spread or through that spread on either side at expiration. We don't let that happen, right? And so that's why you're only on the hook for $200 a contract because you can't lose on both sides. And so when I do them and put them both together, it's paying me about $20. So about a 10%, return or so on my money because $20 on $200 risk is 10%, right? So that's what it is. That's what an iron condor is. Does that help?
Let us know, Lisa, if that helped you out at all. We'd love to make sure that you got clarity there. And while we're waiting on Lisa's response, I do see Alan over in YouTube and everybody. If you're in YouTube watching, you can also let us know if you have any questions before we go to the VIP session. And real quick, I do want to give a shout out. I know there's several of you all working on getting into the coaching with Doug and Dave. So just make sure that if you click the link in here, it's pinned to the top of Facebook, YouTube. It should be in the chat. The team should have dropped it in the chat. There's still time left to get coaching past this event. If you don't want this to end, you can jump on in. 50% off services, which is crazy. And you can jump in and start getting access immediately. This all expires tonight at midnight, so make sure you get this one-time offer, never seen before. It's not, you can't go on the website right now and even see this opportunity. It's only available for you all. So shout out again to everybody who got in and for those that are working on getting in. But real quick, Dave, Lisa said that was my mistake. I see that there are condor calls and condor puts. Yes, so I'm assuming she's good now.
Good.
So Melissa
Excellent.
says,
Awesome.
Melissa says real quick, Dave, in the chat, I don't know if you've seen it. She said, what does coaching look like? Is it phone calls? Kind of break down exactly, like, deeper what that looks like.
Well, what's cool is through the service, you're with Doc live every single day, every morning. So you're with him live. It's private. You can ask your questions, get coached by him every single day. During the month, Doc and I are going to do a coaching session for this group with the two of us together, where we go more in depth on these things, answer your questions as a group, work through it, and make sure that you guys have everything you need to succeed, right? So we'll be doing that, once a month with all of you guys that are part of this group, right? And then for me, I do my newsletter, comes out every Sunday with video analysis and everything. It comes out every Sunday at 5 p.m. And if I have any trade setups I want to do, then I put them there. Otherwise, I learn throughout the week. And then our support team, if you have any questions, right, you can ask away and I'll answer them. Team will answer them. We've got a student community that's in our portal as well. So we have a whole student portal, and some of you have gotten into it, that has your different, courses and things that you get from us in there. And so everything has instruction on it. It has video instruction of everything. And then we've got our student community. We can ask questions, and Doc and I go in there and answer that stuff too. And, if something comes up where we need to jump on real quick with you and do a quick call or something like that, we'll do that from time to time. We just ask that people don't abuse it, right? And then obviously for those, for you five that, got in quick yesterday, awesome job. I look forward to our 30-minute one-to-one session that we're going to do, really to maximize setting up your trading business for you. So we stay, pretty connected to everything, right? And you hear from us, well, Doc, every single day, and me probably 3 to 4 times a week. So we're always there, which is nice. We've really worked hard to pretty much make this the most comprehensive service that exists in the marketplace for what we do. I don't know anybody that does everything that we do and even alerts their trades ahead of the time of doing them. So, yeah.
Awesome. Melissa, let us know in the chat if that answered your question. Let us know. We'd love to make sure that you got the clarity that you needed. And if anybody else has any questions about the coaching, we want to make sure you get clarity, since this does expire tonight at midnight. Now, here in just a few minutes, we do have our last VIP Q&A session. So VIP, don't go anywhere too fast. But just know that if you have any questions about the coaching, we want to make sure that you all have clarity right here, right now, so you can make an educated decision, right? And we want to make sure that you're equipped. And so Lisa says, yes, thank you. That helped. Awesome. So Dave, real quick, because I know a lot of people are asking this question. I think you went over this yesterday, but I just know that people are probably thinking this. Is this for somebody that's very green, very brand new? Would you say this is for them as well? Or do you have to have some level of experience to get in on this?
No, that's the best part. We have all the training and everything available for you. And that's why we're doing the coaching live with you, to help you get going if you've never done it before. We have new students that come in all the time that have never traded options before. And we, in all of our platforms and programs and our services that we have, we've got literally, here's how you sell an option, and that type of, instruction that's in there and how to do it. But what I always say, especially for this group, because you're getting the keys to the kingdom, you're getting if you go on our site and look at the bundle of just Doc and I services, the discounted rate for the bundle, it's $2,500, right? Doesn't include any coaching, separate sessions or, the other stuff we're doing here. So but you get to get every single day, you jump into a live room with Doc, live at the markets, and watch the trades being actually done in front of you. What a better way to learn the mechanics of how to do it, to ask the questions, to make sure you understand it, and you can paper trade right alongside them and how that, and then you can do the same too. Like I said, Doc is more active, right? And I'm more kind of in the middle of active passive. So my trades, are a little bit more kind of set it and let it do its thing, where Doc's in and out, type stuff. Especially when he's doing the campaigns, I jump in the room and follow along. I love them that much. So that's kind of the cool thing is you kind of get the best of both worlds.
Awesome. Great, great, great
Mhm.
insight for those that need a little assistance. So you all, you know the drill. You can go to replaceyourinkomechallenge.com/join. All right. We're gonna text and email this to everybody when we get offline here to make sure that you have the resource before it closes tonight at midnight. We don't want anybody left behind. But if you're working on getting in and you're like, you know what? I really feel like this is for me. Just put working on it in the chat so we can go ahead and give you a shout out ahead of time. And we'd love to see everybody in. Lisa, we'd love to see you in there. We'd love to see Lynn. We'd love to see Janice, Zoe. We'd love to see Sunny over here with us, Melissa, and who else is in the room with us? We got Melissa. We have Donna. We'd love to see you in there. Marilyn, we'd love to see you in with us. It'd be phenomenal to see you daily in the huddles as we're trading live together. But with that being said, you all, we're going to officially close this out and go to VIP, where VIP, you can ask your last questions before we end out this week. Everybody put thank you in the chat to Dave and Doc just for providing a brand new event at such a high quality. I think they crushed it out of the park. So just put thank you in the chat to let them know that you're appreciative of them pouring out their decades worth of experience for free for most of y'all, and some of y'all paid just $97 to be in the room. This is crazy. So hopefully maybe one day they'll do it again. I don't think they're going to do something like this because it takes a lot of effort anytime soon, but go ahead and let them know in the chat that you appreciate them sacrificing when they could be with family, they could be doing other things, but they're here with you all. So if you made it here to the very last video, the very last training of the Replace Your Income Challenge, we just want to say thank you as well, because we couldn't have done this without you. These replays for general admission will be taken down Sunday night at midnight. Okay, Sunday night at midnight, VIP, you get extended access. So we'll make sure that you get these. If you're having trouble viewing them, as I've seen one or two people saying they need it resent, we'll make sure we get you all, I promise. But then Dave and Doc, we need to make sure that these get loaded up into the community for those that are getting into the mentorship for sure. So, but just know you have, if you're free in here and you're just jumping in and just for the free general admission, this will be taken down Sunday night at midnight. So make sure you join the coaching so you can have extended access to the coaching. But with that being said, y'all have a great evening. VIP, hang tight in Zoom. But Dave, Doc, I'm turning it over to you.
Yeah, no, it's great. Have we let them go from Facebook yet? I just want to say thank you to them and for spending the time with us. And guys, give it a shot. I mean, 170, 180 bucks a month. We'll put that back in your pocket pretty easily, but I think you'll really master some great skill sets during this time. So I would love to see you there. But thank you for just spending the time with us, putting your trust in us, and giving us the time away from your families and everything too, because we know how important that is. So thank you.
Yeah, thanks everybody. Thanks for spending your time.
Awesome. Well, general admission, we'll see you later.
Right.
VIP, let's go ahead. You can use the hand raise feature. You can unmute or you can use the chat, but everybody else, we'll see you later.